This is the third chapter in a series that explores what the profile of the Democratic Republic of Congo's accession into the East African Community region looks like. In this chapter, we want to examine the Republic of Congo's economic output and economic structure. Now, the chart in front of us illustrates the evolution of the Democratic Republic of Congo's share of regional gross domestic product. This from the year 1960 to the year 2020. In that period, the Democratic Republic of Congo's share of the region's gross domestic product dropped from a significant 69% to 19%. In contrast, Kenya grew its share of East African Community GDP from 16% in 1960 to 38% in 2020. Uganda also grew its share of regional GDP from 14% in 1960 to 24% in 2020. The Democratic Republic of Congo's entry into the East African Community would dilute Kenya's share of East African Community gross domestic product from 47% to 38%. In 2020, Kenya's GDP stood at $101 billion. This was a little more than twice the Democratic Republic of Congo's economy. If the East African community's GDP is divided amongst its population, that community's per capita GDP would be $923. Only Kenya's and Tanzania's per capita GDPs were greater than this value in that year. At $543 per capita, the Democratic Republic of Congo's per capita GDP was only greater than that of Burundi. The Democratic Republic of Congo's per capita incomes were the highest they've ever been in the year 1978. They have not since experienced the same peak. Between 2019 and 2020, the Democratic Republic of Congo's per capita GDP fell from $580 to $543. Finally, over the last 5 years, the global average GDP growth rate was 1.74%. The sub-Saharan African region's growth rate was 1.36%, just a bit lower than the global average. The East African community's regional average was 3.88%, just a bit higher than the sub-Saharan region's average and higher than the global average. The East African community regional average GDP growth rate, or rather, Republic of Congo's growth rate of 3.61% was higher only than Burundi's 0.73% in that same period. That is, the last 5 years up to the year 2020. Judging by its average performance over 5 years, the Democratic Republic of Congo's economic growth, something of a drag on East African community's regional growth. Or rather, to put it more, it pulls down the region's average growth rate. Now, put together, these statistics suggest that the Democratic Republic of Congo has endured a decades-long economic freefall. Based on these numbers alone, the East African community is welcoming a resource-rich, underperforming economy. In the short to near term, it is unlikely that the Democratic Republic of Congo will be significant engine of regional growth. It is plausible, however, that over the long term, the Democratic Republic of Congo will benefit from and contribute to regional economic growth. Now, what can we say about the Democratic Republic of Congo's economic structure? The chart in front of us displays the 2016 sectoral share of output for the Democratic Republic of Congo, the East African Community, and Japan. We collect the sectoral outputs of each East African Community country and combine them into a single economy in order to simulate the static change that Republic of Congo accession will cause the East African Community's economic structure. The sectoral share of output is an important indication of the structure of the economy. It is observed that in advanced economies, the agricultural sector shares of total output are usually below 3%. This can be explained by the fact that the value that can be extracted from raw agricultural products is limited. The manufacturing process, in contrast, offers the producer the opportunity to transform low-value raw material inputs into high-value finished product. Through the manufacturing process, a low-value tree is cut down, turned into lumber, transported, combined with nails, and shaped into high-value furniture. The increase in capital investments attracts labor away from low-skill, low-wage agricultural sector to the high-skill, high-wage manufacturing sector. Japan, an advanced economy, has an agricultural sector whose share of total output was only 1% in the year 2016. In that year, Japan's total economic output was valued at approximately $6 trillion. Put together, the East African community's output in 2016 was $174.32 billion. Although Japan's agricultural output share of total output was much smaller than the East African community's 22%, Japan's agricultural output value was greater than that of the East African community. This is an indication of the advanced, industrialized, highly productive state of the Japanese economy. The World Bank's definition of the industrial sector comprises mining, construction, electricity, water, and gas. This distinguishes it from the manufacturing sector. In 2016, the DRC's industrial output share of total output was 37%. This was atypical of the East African Community region, whose average industrial output percentage share of total output was 19%. In that same year, South Sudan's industrial output share of total was above average at 33%. South Sudan and the Democratic Republic of Congo are both major raw materials exporters. In the period immediately following the Democratic Republic of Congo's accession into the East African community, that community will not experience a significant increase in its capital concentration. The region will remain agrarian with two important natural resource exporters. This does not preclude the dynamic interactions between sectors that will occur in the long term. It is plausible that the free movement of factor inputs and outputs will increase the economic linkages between the Democratic Republic of Congo and its East African community partners. All things equal, policy and stability allowing, the entrepreneurs of the region will generate, through their unforeseen actions, the economic knowledge that expands the industrial footprint of the region. In closing, in absolute terms, the Democratic Republic of Congo's manufacturing sector is larger than that of many of its counterparts. In relative terms, however, the Democratic Republic of Congo's total output is shared between a greater population than, say, Kenya's total output. This means that the Democratic Republic of Congo's manufacturing sector footprint is small relative to its population. Ultimately, both the Democratic Republic of Congo and Kenya, the East African community's largest economy, remain largely agrarian societies. The accession of the Democratic Republic of Congo to the East African community will add to the community's collection of agrarian community economies. This will not be a static conglomeration of items, however.